Hello everybody, welcome back, and let's get started on a Friday morning. There's nothing much more to say that I didn't say yesterday. Basically, we were talking about the death cross on the 4-hourly yesterday and how that normally invites, and I say normally, it doesn't always, but usually invites a retest of it. You saw that move back into it and effectively retested it. We were short by about $100 or something along those lines. So there's your death cross, there's your retest. Don't be surprised if we see it again today, to be honest with you. Another retest up to 61,200. That could easily happen. That's basically what's going on. So rejection here and then a rejection on the center of the Bollinger Band. This is all 4-hourly stuff. And at this point now, the price action below belongs below all moving averages. So with that, we should suggest we have a cautionary approach to any kind of bullish scenario with Bitcoin. The 200 here, we've got the 20 here, and the 20 sits around 60,260. 21 exponential is at 60,600. There's a lot of resistance above it. Each one of these moving averages is a resistance. Let's have a look at momentum. Momentum has, and again, this is not closed. This is just today's candle and today's MACD. But if it were to close like this, it would be a negative close on the MACD, suggesting further downside is most likely. I mean, the histogram has been telling you that anyway. I wouldn't get massively worried about it because obviously I'm back home again now. We can see the channel that we're in, this descending channel, and the descending channel is a bullish formation most of the time. What you'd expect to see would be a breakout at some point of a descending channel. It's a consolidation. At the end of the day, there's nothing more to it. Remember how I was saying in December, get ready for the summer consolidation? Well, that started in spring. It's still summer now. We're moving into autumn. It's been a very big consolidation. We could be looking at an accumulation area down here, in all fairness, the mid $50,000 zone. We've had wicks, we've had candle bodies. I know we've had extra wicks down there, but we could be looking at this area being the bottom of the accumulation zone. We might find ourselves having a higher low if we do creep down towards, 54, towards $52,000 zone. But at the end of the day, zoom out. This is still just a consolidation. It's nothing more than that. Just like 2019 had a consolidation. It was nothing more than that. Just a consolidation. It was a sharper rise and a sharper fall. But that's all it was. We've had a very long, consistent rise, and we've had a very long, boring, consistent downtrend at this point now. So how long have we been going for? 177 days. It's a long time. But also, how long were we going up for? Absolutely ages. Just felt like it would never stop, but obviously it has stopped. We're now close to 6 months into a consolidation. I'd say we're getting close to ending that, for better or for worse. So let's have a look at the weekly, which is usually my favourite staple for navigating some kind of major reversal. And we're intact for generating bullish divergence on the Moneyflow index if we create a candle body low, which would require Bitcoin to close below $55,000 on the weekly. You get that, you get your bullish divergence. If we were to close down here, and this would be a perfect setup for me, really, close to perfect, moving down towards the 50 simple, 50 exponential, and the bottom of this trend line, giving us a candle body closure at this level, or maybe even lower, and then having your bullish divergence intact, and then again, ricocheting from not just the trend line, but the moving averages like the 50 simple. That would be brilliant, and we'd see that, and then move up and then break out, and that would be good for, obviously not just for price, but that would be good for the general projection of the total 2 that we've got. Which is that, this summer, likely to have seen a consolidation. Again, we see it, we're looking at it, this is it. This is our consolidation throughout the summer. And at some point later on this, fourth quarter, break on, up into new all-time highs over the next 12 months. But we're not ready for that yet. This little dip here on the previous fractal, this is probably what we're looking to see. We might be seeing the last major dip before the big move back up. That's what this chart would suggest. And again, it's not a fractal that you go, oh look, wick to wick, candle body to candle body, perfect timing and up. But realistically, it has been quite useful in determining the general vibe of a bull market and a bear market. It's been pretty useful, so we can't deny it that. Now, the only problem I got with that is that this bad boy over here, the S&P is not playing ball, really. The S&P could be looking at a significant top here, and then that would be a significant top for all financial markets. And so this is why I think some people are struggling with me saying it might go up, it might go down. Bitcoin and Bitcoin cycle, total 2, crypto cycle, that all looks fine, I suppose, to continue with its cycle, which means another 12 months of bull market. This might not. That's all I'm saying. This might not. We've got bearish divergence, Moneyflow index, bearish divergence on the RSI. Got bearish divergence on the monthly. Take it to S&P. It's the same thing as well. Bearish divergence, Moneyflow. Bearish divergence, Moneyflow. RSI on the monthly. I'm not saying that we have to come crashing down, but there is a chance. There is a chance that we do see, over maybe even many years, a bear market for the S&P that takes us down to, we'll call it I don't know if you can say the word, but that move, the March crash lows. That's where your 200 simple and exponential on this monthly are. They exist in the below 3,000. There is that chance, all right. There is always that chance, and I think that to say that can't happen is unrealistic. When we watch things like oil rallying up, which we all know that oil is capable and probably is likely to do, breaking beyond 80 into 90, 100 into the hundreds, that's inflation right there for you. You can suck that up. That's inflation. There's nothing you can do about that. That will be filtered into all your favourite goods and items. That is inflation if we see that. And, the Fed lowering rates in an environment where oil is rallying, it's just crazy. That's just madness. That's crazy. So, the markets themselves are complicated. Well, they're dominoes, aren't they? They're dominoes. There's always going to be one person out there that's going to focus on one particular altcoin, and right at this very moment in time, you'll find them. Oh, look at this chart. It's the best chart you've ever seen. It's definitely going to do this. There's nothing you could say about it. But it's not true. I mean, if you're looking at Bitcoin still consolidating, you can't assume that a particular altcoin is going to rally up on its own. If you're looking at Bitcoin, maybe even turning a corner, but you see the S&P turning down, pointing down to those lower levels, over a prolonged period of time, you can't assume that Bitcoin's going to go, I will rally in the face of that. If you see oil rallying up hard, you'd be, I suppose the best way to explain it is that you'd have to be cautious, because to combat inflation, you'd have to raise rates even more, which would be like, eating a stick of dynamite for breakfast, really, in the financial world. So look, the things aren't cut and dry. It's not black and white. It's certainly not simple. And there's a whole range of things you've got to think about at this very moment in time. But, if you were to just focus on Bitcoin's chart alone, we're still in a consolidation formation with a very, very good opportunity if we come down to 52,500. Losing this area, then it gets particularly nasty, and we are looking down into the 30,000s. So I'm not going to say 30,000 by the end of the day. I'm not even going to say 52,000 by the end of the day. I'm saying this is a trend. The trend will continue. The trend is in favour of further downside at this very moment in time. Opportunities exist here for not just to move back up to the top of the range, but to break out and go to new all-time highs. But remember, when you're trading this one particular chart, you've got to think about all the others. Oil, S&P, Dixie, the lot. It's not as simple as just focusing on Bitcoin on its own. There's a big world out there, and I always try and explain to my patrons, I use analogies all the time. So look, crypto are grains of sand on the beach of the financial world, right? And altcoins especially, you could possibly consider Bitcoin, like a large pebble, but the tide could still drag it around, no problem. And that tide is effectively forex, and forex is directly affected by rates and global implications of geopolitics and events. So we'll leave it there. Currently, it looks like we should expect further downside regardless. But but we'll have to wait and see. Like I say, I'm bullish on the 4-year cycle still. That's still intact. I'm happy with that, and we'll see what happens in the fourth quarter. Hopefully markets will resolve and oil will cool off, and we don't have to worry so much about inflation, and we get some rate cuts, and we can sit back and enjoy that, and everything might be okay for the next 12 months. But there is a good reason to believe that things might not be okay. And it's not because of Bitcoin's chart, it's because of other charts out there, and you know, I suppose other things. So let's just be cautious about what it is that we're doing. Let's not go mad. Let's just be cautious. But you can trade it. It's tradable. Black swans happen, and black swans for the most part are huge opportunities. Anyway, we're doing a live stream tonight. If you want to join the Patreon, there's links in the description below for that. Alternatively, hope you have a nice day. Take it easy.